Hi everyone, welcome to Day Trading with Zach. Today we're going to talk about support and resistance for day trading. Now, I know you know support and resistance. It is one of the most popular topics when it comes to technical analysis, and you would have heard of support and resistance regardless of whether you have picked up any kind of program or courses out there. So how is this support and resistance different from the other types of support and resistance you have heard so much about? Well, this is support and resistance for day trading, which takes into account market depth. Now, if you have not watched our first video on market depth with Zach, I highly recommend you to watch that first because this is a follow-up to that market depth video. We find the support and resistance using market depth. And this, ladies and gentlemen, is how we're going to do it. First of all, let's talk about support. Now, how do we identify support in the first place? There are two concepts I want you to keep in mind. First of all, roughly look at the minute chart to find the support. Yes, minute chart. Not the hourly chart, not the day chart, but the minute chart first. The chart for the day. This is the first idea. The second idea is to roughly look at the market depth and search for that thick queue at the buyer side. Now, with these two concepts, these two foundations, you would roughly have a support price in mind. But you need to question this right now. Is this support that you have found really a support? That's when we really need to observe the market depths, which we have discussed in the first video. Now, when the price reaches the support price that you have in mind, monitor if it's able to sustain above that support price. For example, if 50 cents is your support price with 5,000 lots at the buy queue, you have to observe a few things. Number one, is it being sold down still? If yes, we don't go in first. We observe and we see that there is a selling momentum. In this case, someone is selling 1,000 lots at the 50 cents from 5,000 buy queue to 4,000 buy queue. And this means that there is selling momentum and no buying momentum. If let's say this continues to happen in such a way that someone continues to sell that 1,000 lot at 50 cents, that means that the selling momentum, the selling pressure is very much alive, and the buying momentum which we will need for EP is not in yet. Do not think of EP or entry just yet. Now, this is not the end of the story, of course. If it's being sold down, we have to ask ourselves next, anybody refilling these levels, refilling the buyer levels to defend the 50 cents price? Now, if someone is defending this 50 cent price, is that person able to absorb all the current seller's tickets? Now, if let's say someone defends the 50 cents level by adding another 1,500 lots to the buyer queue, that is a potential renewal of trend. That means the selling momentum may end, and that is the start of the buying trend. Now, all this is to allow yourself to think, is this support really a support? To have a confirmation of the support price that you have in mind. So with all this, let's put a few things more in perspective. First of all, the support price is where someone is supporting, literally supporting the price. Meaning they will refill the buyer if someone sells down to defend that price, just in this example that I gave you. Or all of the ticket holders at that particular point of time thinks that the support price is not where they want to sell, and therefore the selling momentum will eventually end. And hence, eventually, nobody is willing to sell at that price unless someone triggers it. Again, let's use this particular case study here. I would like to just say first, 50 cents, although it's a support price, it is not where we want to EP. Why? Because if you EP at 50 cents and somehow get the tickets, it means that someone is selling down at 50 cents in the first place. Someone is selling down to you also means that the momentum is now selling, and with our principles, we do not want to get into a selling momentum as we have discussed in the first video. What we want is a buying momentum. So how do we EP, enter? Now let's take a look at this example. After the sell down at 50 cents stops and people start buying up at 50.5 cents. Now we have made sure that the support is a strong one. We have observed 50 cents was able to sustain in the previous example. Now if it stands strongly and nobody is selling down anymore, we can be prepared to enter at 1 to 2 bits higher than the support price, depending on the situation. For example, if it goes up too fast, then you would have to enter at 2 bits above 50 cents. Now, when 50 cents is stable, what happens is that we can see perhaps a buying momentum happening at the 50.5 seller side. For example, someone bought up 1,500 lots at 50.5. From 2005, it drops down to 1,000. This is buying momentum starting. And this is where we want to potentially prepare to get into position. And if this momentum continues to go, someone buying up another 600 lots at 50.5 and drawing down that seller queue to 400 lots, and ladies and gentlemen, this is where we like to start to EP. When huge lots eating up quickly, this is where you can start to EP already. It's a timing for you to EP. Next thing you need to do is to see whether if the 50.5 cent goes on to become the buyer side. This is where you start to monitor for a TP or SL, and you start to manage your trade. Now, under the topic of managing of trades, I always like to talk about the SL first, the stop loss first. Now, how do we SL if we EP at 50.5 cents near the support? This, ladies and gentlemen, is the easiest decision making ever. Since you know 50 cents is well supported after observation through the market depth, and you EP into 50.5 cents, that's our price. Now, if the selling momentum further hits you down to 50 cents again, which means the 50 cents goes back to the buyer queue, and then you need to be careful. This might mean our judgment is premature, and therefore our SL, our stop loss, will be at 50 cents, maximum at 49.5 cents, that is 2 bits. So basically, when it comes to SL, we only have 3 options. Either we break even and sell at 50.5 cents when we see a huge selling momentum coming, which means that order keeps on refilling, or we sell at 50 cents, which is 1 bit SL, maximum. We sell at 2 bits, which is 49.5 cents. This is straightforward. For the last part of our video today, let's talk about resistance. How do we identify resistance? Now, identifying resistance is easier than support. Let's revisit the 2 concepts we had at the start of this video. First of all, let's roughly look at a mini chart again to find the resistance of the day. Let's also roughly look at the market depth and search for a thick queue at the seller side. Again, with these 2 foundations, you will roughly have a resistance price in mind, and then you will have to again observe the market depths. And of course, when we talk about resistance, we are talking about managing our TP, managing our take profit. Again, let's go back to the previous example that we had. If we see, based on the same market depth, that right now 51 cents is the resistance. At that particular 51 cents, you have about 3,000 lots at sell queue. You have to observe a few things. Number one, is the price still being bought up at 51 cents? If no, you realize that there is only just 100 lots being bought up at 51 cents. After a while, that means that there might be a weakening buying momentum. There's no one else looking to buy at 51 cents. It has reached a resistance. Your confirmation, or rather your suspicion that 51 cents is a resistance might be true. And this is where you might want to prepare to get out of a position. And there is another possibility. What if 51 cents keeps on refilling a sell order? When the buying momentum comes and is keeping the whole buying at 51 cents only, that means that there is a lot of filling, the refilling of 51 cents price, 51 cents sell order. Then again, you need to be careful since many people are taking profit at this current level. Lots of people are refilling at 51 sell queue. In this case, you could see that there is 1,000 lots refilled at this 51 cent level from 2009, jump up to 3,009. So ladies and gentlemen, if this is the case, then you might have to get out at the buy queue, 50.5 cents, you might have to break even. Of course, the ideal situation here is that instead of seeing 51 cents being refilled, what we see instead is that there is a huge volume coming in, buying up the entire 51 cents. Suddenly, this 3,900 gets a fill, and 51 cents becomes the new buy queue, the new best buy. And then 51.5 cents becomes the new best sell. From here onwards, you'll be making at least one bid. We will be monitoring for a higher TP from here onwards. Your resistance has been broken and it becomes a breakout trade. And there you go. This is support and resistance for day trading with the help of market depth to confirm those support and resistance. As a last note for this particular video here, why is it that we spend time looking for support and resistance in the first place? You see, when you look at multiple shares at the same time, you will want to have a price in mind for those shares. That support and resistance that you have in mind for these shares will form the basis of your action. Maybe you see that the price is in between support and resistance. There's nothing much for you to do at that point. But once you see the price going back to the support, that might be a time for you to EP. When you see the price going up to the resistance, that might be a time for you to TP. Support and resistance gives you a price which you can take action on. And when you have a lot of shares to monitor, having a very good list of support and resistance prices for your watch list, for your stocks, will be very helpful. That's it for today's video. I look forward to the next video with you guys. Thank you. Bye-bye.